Good morning. What's happening, guys? It's been a few days since I last checked in with you guys, and we've got a few more developments that have happened over the past few days. Let me check which date it was that I last streamed, just so I can pick up the pieces of what's happened since then. What's happening, Marco? Let's see. Your channel. This will tell me what date the last stream was. So the 13th of July was the last time I streamed. Let's mark that out. So the 13th was... Let's go down to the hourly chart. So this day here. This is the last point that I streamed. What has happened since then? We've had this really nice rally heading up, higher lows consistently, new highs. We're back on track to come and attack and revisit $69,000, which was our 2021 all-time high. So that's a positive move up for the bulls or for investors. Obviously, as Bitcoin appreciates in value as well, goes up on the charts, the altcoins are also going to see that same positive price action too, I would say. But we'll look at the alts in a minute. What's up, Coley? Hope you're doing well. So, another thing I noticed was at the moment, we seem to have struck this kind of resistance level about here, right? What does that line up with? It's this line here and somewhat this dotted line here. So let's see what the hell those are if I zoom out. Miss you too, Coley. Alright, so it's an intersection. So we've got a midline, which is this line here. Let's figure out where that's coming from. Like, what is that? That midline is, we have to go out to the daily chart. Now this is linear, this is a linear chart. I've picked out the highs from, or the lows mainly. This is where I get the parallel from. It's the low from here, lined up to the low from here, producing this line, and then the parallel of those are the highs from here. So you've got strike here, here, and here. Price action bounce here. We're currently at that same central dotted line. Now the top side, probably have this a little bit inaccurate. Let me adjust to encompass the activity that happened over here. Like there's some activity that bounced off it here, here, here. You had one here. This was all beyond that, so that's something else. And here as well, I would argue. So anyway, there is this this trend that is somewhat going up, and there's also a trend that is what we've been in that is somewhat becoming down. So if you combine the two, it's kind of like a bull flag. I'll show you what I mean by that. So let's just for argument's sake say this section here is the flag pole, or you could even argue it's from all the way back down here, that it's all of this. All of that trend there is the flag pole, and then this channel that we've been descending in for the past however many months. I think it's been since late February we came into it, so it's been quite some time. We've been months grinding down in a flag. But once we complete this flag and bust out through the top, if we do get that result, That is like a textbook bull flag scenario. So you can argue that yes, it happened back over here too, and it failed because we had an uptrend, beautiful flagpole, downtrend in a downward channel like we're getting right now, right? However, we know that the result was a breakdown and we lost that flag and it became a heavy dip. We came back down to 30K or the 30K region. And so right now, what we're in right now is not this yet. We haven't, there is a threat of that happening still, but for the moment, we're on the optimistic side of the flag, is what I would suggest. So you can see, you know, we are testing the top side of this descending channel here. It's what I would call a bull flag. So from there, yeah, that's the crossroads we're at. We're at the central line of this ascending trend line or channel, meeting with the boundary or the upper boundary of this descending line. Yes, there was a couple of moments of activity beyond it, but we're back at it and it's reacting at this moment. We're coming up, we're about 3 minutes away from the daily close, 3 minutes 12 seconds. And not that the daily close ever tends to do too much for activity, but let me just look at a watch list that I've got here that might have, you know, a few more alts to look at. Let's go to the Bybit list. Okay, so bond silly has come up 18%. Let me have a quick look at that. And by the way, Doge, look at Doge breaking out of this falling wedge, by the way. That's happened in the last 2 days. We've had a breakout right here. So Doge is currently heading up. That's optimistic. See, do you notice how we actually have to go down to a lower time frame, but check how we bounced off the top of the descending, the falling wedge. That's quite a common thing that happened. I've seen it like on a lot of charts a lot of times in the past, where price will break out and then come and back test the top side of the falling channel. And here we are today. We're like, you know, looking for new highs. Looking left, like from a support resistance point of view, this would be a big area here. Like that seems to be a pretty critical high there in the sort of local region. So that, this is probably a most extreme point of a high here to keep an eye on. So these prices, by the way, that's 15 cents. This one up here is, let's call it 17.5, so 17.5 cents as a resistance. And we just need to clear these levels. There's another one up here. This is a 21 cent high, and so on and so forth. You just have to look left, look at the most dramatic peaks, and you know, these are levels to beat. So we're going to call that 23 cents basically up here. So yeah, these are the targets, I would say, along the way. So no need for fibs really at this stage. Like I'm just looking purely at previous highs, previous resistances. What's up, T Black? All right, so let's go back to Bitcoin because I want to see if there's any Fibonacci answers, like anything from a Fibonacci perspective that we need to be paying attention to. So let me turn the channels off. Let's turn off that and that. Let's just get it clear. And maybe we can even, we'll leave it as is. Okay. So there's two extreme points here. Well, three. There's this one as well. Let's call this A. I'd say that's like that's an extreme pivot point because we rallied down and then pivoted. So that's, to me, that stands out. That's quite a sharp point. That's a sharp pivot. Another sharp pivot that stands out is this one up here. This is the all-time high of Bitcoin, B. And then the most extreme low that we've had since B is here, C. So it's been kind of recently that we set in that low. So there's a couple of Fibonacci retracements that you can do that I think are pretty substantial. So there's from A to B, and then also from B to C. But let's see A to B. Where has been like a bounce point? I think that we had a pretty decent test of the 0.5 Fibonacci here. That produced a bounce. And that is the bounce of this move, this A to B run. That produced a trade that you could have taken. You could have taken a trade here and ridden, produced by the 0.5 fib level. We know Turbo likes to talk about the 0.5 fib because it's a fairly powerful level. So is the 0.618 or the golden Fibonacci level, which would be, if you go A to B. Now this other pivot, this kind of happened in no man's land. You had, I would argue that this is more of a trend line pivot. This one, this position here is not produced by a fib level. This is produced by one of these. I think it's this one. This low and that low. Look at that. So let's change the color. Let's make this like, you know, pink or something. So A and B produced C over here. C. So him and her produced a baby. C. Just as him and her on a Fibonacci context produced C here. It was a Fibonacci pullback to a 0.5, which produced a bounce. So now that we have that, is there a Fibonacci? I haven't even looked at this yet, but the fib from 1 to 2, let's change it to numbers now. From 1 to 2, Fibonacci retracement, what are the resistances as we try to climb back to that all-time high? Have we broken through any of them? Has there been some like key tests on the way back up? And yeah, look at this. I'll have to jump down to a 1 hour time frame to sort of see the detail. But you can see we had a reaction. Now remember, we didn't know 2 until this point in time, right? So any activity that reacts with these Fibonacci levels prior to this date, or it's an unknown. Like we didn't have these levels at that time. So you have to look at the activity after 2 to see if there's any reactions on this retracement that I'm looking at. So on the way back up, yes. Look at the trouble it had initially to get through the 236 fib level. It did eventually. It popped through, and then it dealt with the 60k round number resistance. So those are two significant, I would say, arguments as to why they pivoted where they did and produced the action that they did. And then, okay, cool. So what is this dotted blue line? Like, why did it pull up? Okay, if it rejected off the 60 here, 60k, why did it find support at this level? And I would say it's probably a fib from here to here. This looks like a 0.5 bounce. Let's just check that, by the way, just really quick. Wrong tool. Very quickly. Yeah, it's a 0.5 fib bounce. So it's come back here and bounced up there because of this point to that point as a fib retracement. So where was I? The blue line. Why is 56? Why have I marked out this dotted blue line? I think if I go back out to the daily, you'll see why. It's because of back here on the 1st of May, we hit a low point, and that pivot is quite significant. So that's why I marked this blue dotted line. I was going to say blotted line, but it's a blue dotted line. So going back down into the 1 hour chart, there's causation. Like there's the reason why we've got a reaction off that level, I would say. And here we are, like market structure is bull trend right now. Like on this time frame on the hourly chart, if I'm just to go reset chart, frame it all up, even zoom out a little, we've got a low, a high, a higher low, a higher high, a higher low, a higher high, a higher low, a higher high. This is an uptrend. There's no doubt about it. There's no confusion on that. Just as this was a downtrend. Lower highs, lower lows. So market structure was breaking to the downside repetitively. So causing a downtrend. Just as this obviously was an upswing, that was a downswing, this was a downswing, and now we're in an upswing again. This is what's formed our flag. We've got like this big W on the screen. Very big W situation going on. So right now, was there any activity off? Yes, look at this. This was the golden Fibonacci level, the 0.618 Fib level. Look at that reaction off that level. Bam. Came back, found support at, look at this, it's an SR flip. You've got resistance from the past producing support in the future right here. Boom. You've found support and now you're traveling up. What is the next key level to test? We've broken through the golden pocket, which is the 618 to 65 Fibonacci level. That's been cleared. We've cleared that test. And now we are traveling up to the previous all-time high of $69,000. And then next door to that is the 70K big round number, which we've had a lot of activity of. You know, here, here, here. And then from there, like if we clear these hurdles of resistance, these last few hurdles here, if we clear that, all that's left to test is the all-time high. And then, you know, either that's going to produce a really violent resistance and we bounce back off it and we double top, or we bust through it and we travel to 80,000 or beyond, you know. Price discovery, you know, you name a price, like it's all speculation at that point when you're in price discovery about where the high is or where you're going to pivot. There are methods and tools to sort of measure where that could be. Like, what are the most common points for a pivot, or when you're in price discovery? One of them is to do a Fibonacci extension tool. A Fibonacci. So instead of retracing, you're extending. And that is this tool, the one that looks like this. Trend-based Fib extension. So I want to know this trend here. I want to know A, B the high, and then C as the, if we're assuming that that is the lowest point since the all-time high, then we can do a trend-based Fib extension. Now, a 1-to-1 is a common target when you're doing a Fib extension. So if we take it from A to B and then draw back to C, where does the 1-to-1 take us? What's the target? It's $88,700. It's up here. Now, a bullish target would be a 1.618 Fib level extension. Where does that take us? That's up here. That's 110K, almost 110.5 as a target, an upper target. So that's bullish. That would be a play out of the flag. You know, if you're taking the flagpole theory, if you take the measured move, this is another way of like producing a target into the future where there's no prior resistance. If you were to duplicate the flagpole, push it to the breakout point, let's just assume, let's just hypothetically say we do break out and we create a trend. See how that almost lines up with the 1.618 Fib extension target. So you can see, like, I don't think that looks too crazy. Like that seems to be on par with, you know, the kind of activity we get post halving, right? If you still subscribe to the cycle theory, Bitcoin 4-year cycle theory. Cool to see 20 people jumping into the stream. Welcome, guys. Smash up the like button if you haven't already. It's cool to finally see some activity on the charts again. Like it's We've all been hanging out for this. We've been driving ourselves crazy in the community because crypto hasn't really given too many answers. It's stayed quite relatively flat and boring. Still, I would argue that yes, there were moments that looked like we lost the range and we finally got our answer. And I'm just like freehanding the range here, but it lives somewhere in here. We've been stuck in this range. We've been in this rectangle for like 4 months, I think. At least all of March. So March exists from here to here. All of April, which exists from the end of March to the start of May. All of May. All of June. And almost all of July. That's 1, 2, 3, 4, almost 5 months sideways in this range. As a crypto enthusiast, that's a long time. Like, that's 5 months in crypto feels like an eternity. But nonetheless, the range has been good. Like, it's a good expansion of price. Like, you've got, what's that? It goes below 60. It goes to like, let's see, 56.5 all the way up to 74 at the most extreme, or 73.7, whatever you want to do. So it's like it's beyond $10,000 of a range, which is very, like, that's a nice range to trade. If you kind of saw this coming, this would have been a hell of a spot to set up a grid bot. Like, if you found your boundaries. By the way, where's the evidence of the boundaries? You had it fairly early on. You had these 3 peaks. Like, they're not perfect to the dollar, but they're all in the same neighborhood, I would say. They're all in this blob. So you've got, okay, I can sort of somewhat see that there's some kind of cloud of resistance above us, and we haven't beaten it yet. And it exists somewhere between these 2 waves. Or these 4 waves, yeah. That's our resistance zone. It's kind of like the ozone layer. And then down the bottom, we've got the sea floor, the ocean floor. This has been our support range, kind of thing. That exists somewhere here. So you can sort of see, I think everyone can pretty much get on the same page that the bulk of the action in the last 5 months has existed in this box. And it's been very frustrating. We have not got an answer, but I think, perhaps there's been a lot of stuff politically, like global stuff, like, Donald Trump, Joe Biden, need I say more? There's been a lot of stuff to shake markets up. I haven't looked at the stock market lately. It's been the weekend. I think we've got pre-market movements happening now for the S&P 500. Let's see what that's doing. That's US 500. Okay, so in the last... When did it open? Let me hit reset here. There. This is the last 3 hours of this futures, this S&P 500 futures. So the last few days of the stock market, or the last couple of days of last week, has been huge corrective moves, And then we have to see what this week is going to produce. Is all of this political news going to produce a bounce, or are we going to carry on this path of downward on the S&P 500? Now, you can speculate and go, oh, okay, well, if the stock market's going down, maybe that money's rotating into something else. Maybe even crypto, like maybe. That's something to speculate on. There's no maybe you could dig for the evidence, but yeah, I'm pretty comfortable to speculate that that's a possibility. That's where money is flowing from, perhaps. Anyway, that's pretty much the main points I wanted to touch on today, just to catch up and touch base with you guys and do an update on where we're at. It's been pretty incredible that we have had no real answers as to down or up 5 months after hitting, you know, the extremes of here and like here, we're still pretty much within the range on Bitcoin. So we haven't lost the bull run. We haven't continued the bull run. We're just in a holding pattern. We're just waiting for the next step. We're on pause, basically. That's not to say you can't trade every day. Like, you know, there's the altcoins are doing fantastic things, I'm sure. I think before we were looking at how Silly did yesterday now, because we got a new daily now. But Silly went up 18%. Look at that. Look at that solid day there. That's a Sunday candle. Really nice to trade that if you were in it. And what was the hint to it? We had some kind of like trend line. We had A, B, arguably C. There was a lot of action here respecting A and B and C, but we broke it here. We broke out of that, and we didn't lose. We didn't make any new lows since then. So it's been on a gradual uptrend. You could have been long from that breakout point. You'd be up in nice profit right now if you were tracking the breakout of that trend line. So that's been doing well. And provided Bitcoin continues to charge up and maybe even break resistances, there could be a Silly rally. There could be a nice move on Silly, just as there has been in the past. Whoa, Coley, thank you for the super chat there. $5, appreciate that. Thank you. And thank you for all that you do. So let's go back a few steps. What else was the one that was looking like it went up? I think even Doge has been doing pretty well lately in the last few days. Look at Doge has had an incredible 2 weeks. Let's see, we've got how many days since this low price here? It's been almost 3 weeks. There's the 3-week mark as of the 26th of July. So if we come out all the way out to here, that's been 3 weeks of non-stop, you know, bullish trend, which is great. There's been some pullback days, some red days, but nothing to throw this trend back down. Now, obviously, this is still downtrend, by the way. We've got a high, we've got a lower high, we've still got a lower high here, as it stands. Like, it has not been set yet, and we've got a low, either equal low or lower low here, and definitely a lower low here. So this is all the features of a downtrend. So you could argue that Doge is still in a downtrend since this high. Yes, I would agree with that. Now, zooming in, this is the daily chart, but if we zoom in, see how the context changes when you get a different time frame. We've been in an uptrend on the hourly chart and probably the 4-hourly chart. If you hit reset, yeah, we've broken structure back to the upside, because 4-hour chart, these are the last key resistances that we were dealing with, and we've since broken through those. So we're doing well. Anyway, guys, that's pretty much all I wanted to touch on. You saw some of the techniques that I used to analyze Bitcoin: Fibonacci retracements, lines of support and resistance, trend lines. Those are the 3 things that I mainly look at. Notice I didn't open any indicators. This was all purely drawing tools. This was free stuff. You don't have to pay to be able to get an understanding of where Bitcoin's going and where it may be heading. You don't need RSIs, you don't need MACDs, although they're fun and they can give you insight. You know, I don't doubt that I don't even have to open them to understand that this amount of days going down probably would have caused a dip on your oscillators, right? And now that we've seemingly trended up in the last few days, I don't doubt that the oscillators have turned a corner too, off some kind of low. I don't need to open the oscillators to know that. I can just presume that by the action, by looking at the chart and seeing that there's waves in the price. So let's do that anyway. Let's just quickly look at oscillators. I think it's this one. Which one is it? It's been a while since I've used these buttons up here. I'll just see if I can find one that has an oscillator on it. Ishimoku, MFI. Okay, here we go. There's an oscillator. So we've got the money flow indexes. The money flow index oscillates to what's happening with money flow. You don't really need to open the MFI to understand like that's going to cause a dip on the MFI. What did we get? A dip that has rounded back upward as we've bounced recently and money's flowing back in. See what I mean? Like, you don't really need an oscillator to tell you what the chart's telling you. Unless you're scalping, I would say intraday, that's when these tools become more useful. But from a high time frame, you don't really need an oscillator to tell you that we've come down and then bounced. Like, you don't need to bring that up. We can see that on the price. What other oscillators have we got here? This is a Fu Manchu. See, I haven't paid for a subscription on TradingView for over a year now, so maybe I'll do that next time. Next time the Black Friday sales come on, which is not too much longer to wait, I'll buy a subscription to TradingView so that we can view all the tools and the fancy stuff. Here we go. Here's a couple of oscillators that are pretty common: MACD and RSI. Look at that. See how, let me close this one. See how they're just reflecting what we see anyway in the price? You've got a big hump here in price action, a high, followed by a sell-off. What did you have on MACD? A big hump, followed by a decline. RSI, a big hump, and then a decline. So MACD and RSI are saying the same thing as what the price has said. Now you've had a dip and a bounce here, you've had a dip and a bounce here, you've had a dip and a bounce here. You've had a high and then a rejection, you've had a high and then a rejection, a high and a rejection, a dip and a bounce, a dip and a bounce, and a dip and a bounce. See what I mean? This is all daily oscillator stuff. You don't need to open MACD and RSI if you're just looking at a chart. I don't feel like I need to at this stage. It can give you confluence, like, and it can even give you early warning signs. Okay, look, so I'm not saying don't use them. I'm saying, like, you can still deduce a lot of information just from the charts. You don't need oscillators to show you what you're looking at. But, however, they are fun to look at when you've got little hints of a change in direction. So right here, you had the MACD line crossing the signal line. You had the histogram flipping color. You had red flipping into green. That gave you a signal that, hey, this is a pivot. You know, get long. The daily MACD has switched. And you're getting green histogram bars. So you could have been long back here. And you could have ridden all of these days in a row going up. So that, yeah, it can be useful in a simplified way like that. Look how simple that was. That literally took less than a minute to explain. And I think that's how technical analysis should be. I don't think you don't need to decipher. You don't need to spend hours like spilling over all these different indicators and complicating things. You don't need to do that. But, so in that light, I think I should probably wrap the stream up because I don't want to just keep repeating myself and spilling over the same information. But yeah, I think most of us in this community, and if you're new, like, check out my previous streams as well, or even look up other just basics on technical analysis and market structure. But keep it simple to begin with. Don't dive into something that's extremely technical, because overcomplicating can just make things too challenging, and you'll find that you're second guessing yourself a lot. And you know, if you kept it simple to begin with, perhaps you would have been on the right track anyway. So yeah, I think we've all gone down the path of overcomplication. Yeah, I agree, buddy. I've overcomplicated it many times. Yeah. Yeah. Well, I'm going to wrap this one up, keep it short and sweet. I think it's been 35 minutes, 36 minutes. Thank you so much for tuning in, guys. Thanks, Coley, again for the super chat. And I'll catch you in the next one. Hopefully it's sooner rather than later. All right. See you guys.